Cash book is one of the types of journals in which cash and bank related entries are recorded. There are basically three different types of cash book: a single column cash book, a two column cash book, and a three column cash book. As I've written, on the single column cash book, that the left side or the debit side of the cash book is the receipt side, whereas the credit side or the right side is called the payment side. So all the receipts that are going to be received by the business, all the money that is going to be received by the business, it is going to be put on the debit side because the assets are increasing, and on the credit side all the payments are going to be made because the money is now going out and the assets are decreasing. There is a two column cash book, and then there is a three column cash book. In the single column cash book, as you can see, through the bank transactions are going to take place. Either money is going to be received through the bank or it is going to be paid through the bank. It can be taking place through cash as well. Receiving of cash may be taking place on the debit side, and payment of cash may be taking place through the credit side of the cash account. So either cash account or a bank account. And then when cash and bank account are going to be maintained simultaneously, that is cash and bank, cash and bank, both of them, when they are going to be there, that will be called the two column cash book. We are basically talking about a type of cash book in which simultaneously cash and bank transactions are being recorded. And then we are talking about the three column cash book, which basically takes into account the other two as well. It is like a cash book which acts like an umbrella. If we make a three column cash book instead of a two column or a cash book or a bank account, it accommodates all the concepts. And apart from cash and bank, it also takes into account a third column as well, which is the discount column. Now on the debit side we have the discount allowed, and on the credit side we have the discount received. Whenever we are going to do some kind of sales, we are going to be allowed a discount, just like in this case. Cash sales has taken place, cash sales of 11,000 took place, out of which 10,000 was received and 1,000 was allowed as discount. When we received a loan on the 24th of January, it is coming in the bank because it came through the bank account through a check. That is why it is residing in the bank column. So we began the month with 4,000 in the cash account and 6,000 in the bank account, and then later on during the month we received some money through cash sales and through loan, and that meant that the cash became 14,000 and the bank became 20,000. Now out of the available 14 and 20,000, we spent some money which is taking place through the payment side or the credit side. So rent was paid through cash. So out of the available 14,000, 2,000 was spent and 12,000 was left, which means that the balance carried down will be 12,000. And if we look at the bank account in the same way, or the bank column in the same way, 20,000 was residing with us, and then out of which 5,000 was spent, and we were left with 15,000. So now this 12 and 15,000 will be carried forward to the next month as 12 and 15,000 on the 1st of February. So this is the gist of the cash book. The debit side is the receipt side, the credit side is the payment side, and by subtracting the credit side from the debit side, we get the balance carried down, which is what is eventually brought down on the next on the first date of the next period. Thank you very much. I'll see you in the next clip.